Hello, everyone. Good morning. Welcome to our midweek review of the Forex Morning Mastery session, and I'm very excited to welcome you to another promising edition as we gradually prepare ourselves for the second half of the week. And it has been quite an interesting week so far. Remember, we have been monitoring three financial instruments, which includes the US crude oil, the USDJPY, and of course the XAUUSD. For me personally, most of my profit this week is coming from the gold commodity. I was having some profit on the US crude oil during as at yesterday. But before this morning, I saw that I was taken out at where I moved my stop losses to, which was around 10 pips, but price is still moving in that direction. And on the USDJPY as well, we had some profit. And of course, we are going to be looking at how well this asset has done, how the market sentiment had evolved during the course of the week. And of course, we are going to be looking at the fundamental factors that is driving the sentiment across this market, using them in conjunction with technical analysis on the chart to strategically position ourselves for the next move. So if you are a fan of any of these assets we are looking at, that is the US crude oil, the USDJPY, and of course the gold commodity, this is not a session you want to miss. So grab your favorite beverage, biscuit, what have you, and stay tuned in as you don't want to miss out on this session. And for those who are joining me for the first time, you are highly welcome on board. My own name is Sheriff Daramola, and for the next 30-40 minutes I will be your host as I take you on a trading journey with the intent of identifying potential opportunities ahead of today and the second half of the week. So if you have any question during the course of the session, feel free to drop them in the comment section. I'm here and willing to be of help in that regard. So with that said here, I guess it's high time we moved right into the business. Let's see what, okay, no comments yet. So let's just move right into the business and let's see what is going on. And of course, the first thing we are going to be doing is to delve into the US dollar market dynamic. And for those of you who have been with me for a while now, you know this is our routine, considering the fact that we are trading assets that has a lot to do with the US dollar. And there is no way we want to be looking at the Japanese yen, the US crude oil commodity, which obviously is a US dollar denominated asset, and the gold commodity without really having a background knowledge of what is going on in this market. Now, we are going to be delving into the 4 hours time frame of the DXY. For those who don't know, the DXY is the US dollar index, and it gives us an overview of how the US dollar is performing across the major assets. And so far this week, the dollar hasn't been doing very well. We saw a significant drop. The dollar currently is walking within a tightrope at this moment, caught between political drama around the Fed and global trade tensions. And with no fresh Fed commentary this week, the market is left to interpret tone, risk, and of course sentiment on its own, and without no major economic data for this week except for the S&P global publication, which is coming up tomorrow. So basically the market is just looking at what to grab to make a decision around this market. And of course, we are going to be looking at the technical details to really have a deeper understanding of how market participants are thinking at this juncture and how we intend to navigate the market. Now, let's quickly run through the technical structure we did identify during the Monday session. So, right here on the 4 hours time frame, what we did on Monday was to capture the character of price action since the beginning of this month. And interesting enough, we were able to identify a precise structure in the form of an ascending channel. Look at this. We had the higher lows giving us the support line, and of course we have the higher highs giving us the resistance line. And as at the end of last week's trading session, we saw how price closed just right around that support line of the ascending channel, which interestingly shares a confluence with our key level for this week at the $98.15 level. And what we were looking at prior to the beginning of the week was how the market is going to be reacting to the support line. So we were of the opinion that if buy pressure persists above this trend line, the support line of the ascending channel and that key level at the $98.15 level, we will be looking out for buying ideas around the US dollar. But if price drops below the trend line and the key level, that could incite a sell-off. And of course, the later was what happened. We saw what happened on Monday. Price broke down, retested that trend line, that support line of the ascending channel to incite a massive drop in the US dollar. And as it is right now, what could be the major drivers influencing the negativity around the US dollar? Well, first of all, we have criticism from Trump. We have Treasury questioning Fed's independence, and this obviously had a dent to the US dollar credibility, resulting in investors dropping asset due to the uncertainty around that situation. And with no new comment from Fed official this week, everyone was left in the dark. So market was drifting towards uncertainty, nothing to hang on to hold on to the US dollar. And of course, the US EU tariff threats escalating was also not something that majority want to bank onto to hold on to the US dollar. So as a result of all of this factor, the dollar was under serious pressure, and that was basically the reason we saw that massive move to the downside. Now, with this information here and looking at the technical structure on the chart, does the dollar have a chance to rise this week for the second half of the week? Well, if you look at the technical details on this chart, you will see that price is back into a critical juncture. And what do I mean by that? You see, I have a new level that I did identify this morning around the $97.35 level. And if we go to as far back as the last week of June, so I'm talking about 3 to 4 weeks of historical data, you'll see how the same level had played a significant role in determining the direction of price action. During the last week of June, this level was more of a selling niche, as we saw how buyers were finding it difficult to break through that area. And at every point in time price comes in, we saw sellers come in to negate the buy pressure. But not until the first week of this month, we finally saw a breakout of the $97.35 level that was at the beginning of this month. And since then, this level here had become a support line, as you will see here. Now, something interesting happened during the New York session yesterday. We saw that as soon as price dropped into that area, in fact, you will see the character of the candles here. The last 1, 2, 3, 4, 5, that's about 20 hours. Sellers were unable to break through that area, and it tells me that this area has a strong memory for buying power, at least for the month of July, and it will take a lot of momentum, or let's say a catalyst, to incite sellers to push price, breaking down that structure. So for me, going into the second half of the week, we are at a critical juncture around the US dollar. So the question now going into today's session is, are we going to see a situation where this buy pressure here will persist, leading into price maybe going back into the key level for this week? Or are we going to see the dollar drop significantly, breaking down the $97.35 level? So that is basically what we are going to be looking at. And of course, with this information we have here, let's delve into the charts. Let's go into the asset we're monitoring this week, and let's see how this has influenced this asset. Now, before we go into that, let's quickly run through the economic calendar to see if there are any events to look out for today. Today, Wednesday, July 23, we have the existing home sales change, which for me is not really an event that could give market some substance to hold on to. So I'm looking at Thursday, July 24th. That's tomorrow. I'm looking at two major events for tomorrow. That is the initial jobless claims. This is a labor-oriented data, and of course, it will be giving market an insight into how the labor sector is doing. So everyone definitely will be looking forward to that one. And because of this, we may likely see a delay in any significant decision in the market. So there's the likelihood that we could see continued extended sideways trading activity around it. And secondly, we are also looking at the S&P Global publication coming up tomorrow as well. 1:45 p.m. UTC, that's about 2:45 p.m. local time. And this will be giving the market an insight into the performance of the manufacturing and service sector in the United States. Definitely, everyone wants to see what the report will say, and that will determine whether they will want to start buying the US dollar or dropping it. So if anything, if the figures comes in just as expected or higher than expected, we could see a positive tone to the US dollar. But if it drops below expectation, this may likely send the dollar dropping further below the $97.35 area. So let's go into the charts and let's see how the market is playing out so far, and of course use that to help us navigate the market today. And I see you in the comment section, Jonah Aruna. Good morning to you. Glad to have you around today. Trust you are doing very well. So let's delve into the chart. Of course, the first asset we are going to be looking at is going to be the USOILSPOT. And like I did tell you earlier on, I had a sell. I think we talked about this at the beginning of that. I think we sold right during the Forex Money Mastery on Monday, and I'd held that position until yesterday. And before I went to bed, I moved my stop losses to break even, to about 10 pips, 10 pips thereabout. And unfortunately, I got taken out of that position due to the choppiness of market during the Asian session. So let's look at what we were talking about here on Monday from a technical standpoint. So this was the structure we did highlight during our live session on Monday. So first of all, we acknowledged an ascending trend line, projecting that this week may continue on an uptrend. As you will see, we mapped out the series of higher lows, giving us this beautiful ascending trend line. And one of the things we said here is that we will continue to buy the US crude oil if price remains above the ascending trend line, and our key level for this week at the $66 area. And of course, we saw that during the first 11 hours of the week, the market was more or less choppy, confined within the $66.35 uncertainty during that time frame. And during our live session on Monday, we did acknowledge that the ascending trend line has been broken, right? We saw this breakdown during our live session on Monday. And then I mentioned here that if we see price come back, retest structure, we are looking to sell the breakdown of the $65.80 level and only consider buying if price breaks out of the $66.35 level, which obviously never happened. So we sold the breakdown retest, and of course you can see price did move significantly, about 100 pips before this old choppiness happened. So I moved my stop loss to somewhere around the $65.40 level, and as you can see, I got taken out as the market continued to consolidate ahead of today's trading session. Now, going into today's session, what are the chances that buyers or sellers will be taking over this market? And if you would ask me, this week oil markets are watching two things. Yes, two things. One, how much more Saudi is pumping oil and how much more China is buying. And from the reports we saw during the course of the week, Saudi Arabia has increased its production at the moment. In fact, their output rose to about 9.18 million barrels per day thanks to the OPEC Plus agreement. And you know what that means. More oil in the market is definitely going to potentially increase the downward pressure on oil prices because of its surplus, because it's going to be surplus in the market, and demand will definitely not be something significant. And this is one of the major reasons we saw the price of oil drop since the beginning of the week. Then we also saw no oil imports from the US due to tariffs. Exactly, no oil import from US, and US crude oil is missing out on Chinese demand at the moment, to the tariff situation between US and China. This is limiting oil demand, oil imports from the US. So with the way things are going, and considering Saudi's export of gasoline and jet fuel rising sharply, it shows that there is a strong global demand. And can this be enough to increase the demand for? Can this be enough to reflect on the chart buying pressure from this area? And we also learned that China also demand from China also increased during the course of the last month, and we also learned of some interesting development, which I'm not sure it's confirmed yet, that Malaysia is secretly smuggling, helping China to smuggle routes for oil products to China, which is not yet confirmed anyways. It's something I heard, which sounds like a rumor, but we don't know how true that is. But for me, based on what we are seeing here, it depends on how much more Saudi is pumping oil and how much more China is buying. Now, let's look at the chart here and let's see how the market is digesting this information. Are they intending to continue selling the crude oil, or is there a chance for the crude oil to recover? And for me to have a better insight into this, I had to scale down into the 15-minute time frame. And when I did, this was what I was able to find. So I see here that since the beginning of the week, or let's say since last week Friday, the price action had evolved gradually into a descending channel. And this is quite obvious when you connect the series of lower highs, as you will see here, forming the resistant line of the descending channel. And when we connect the series of lower lows, forming the support line of the descending channel. And of course, you can see price is right within that structure, and it will not be reasonable to be buying within a descending, right? It's not going to be reasonable. So zooming into the structure, this is what I'm using to help me navigate the market today. Unfortunately, I was taken out of that sell position after moving my stop losses to break even. But for those of you who are still holding on to the position, maybe you still have the position open, well done to you. Move your stop losses right now, securing some profit as we wait patiently to see how the price will react to this current structure. So one of the things I'm looking at today is the support line. We can see we saw how that level served as a support line during the US session yesterday. Sellers were unable to break down that structure, as you will see, and then we saw price rise back into the resistant line of the descending channel to incite another wave of bearish move. So price is gradually approaching that support line again. So I want to see how the market is going to react to the support line. Will it break it down, or will it be a barrier again, leading to a bullish move one more time? So that is what I'm looking at. Unfortunately, I'm out of that position. And for those of you who are still in the position, move your stop losses, secure this profit while we watch and see how the market is going to be reacting to that support line at the $64.80 level. Now, the only condition that will make me consider buying the US crude oil at this juncture is for the resistant line of that descending channel to be breached and broken to the upside. So if I want to consider buying here, I would definitely want to see price take out that ceiling and retest for liquidity to continue that uptrend. So that means that market sentiment is leaning towards the idea that China is buying more oil. That they've increased their demand for oil. That means that's going to be the case, and that will only be confirmed if that ceiling is breached and broken to the upside. So that is the only condition I'm looking at before I consider buying. I can't buy within a descending channel. It's way out of my trading repertoire. So let's see how the market will play out here. If it breaks down, retests the $64.80 level, I am looking at joining the bearish move. And for those of you who are already in this trade, you might want to consider adding more sell position, maybe right into the support line of the descending channel or the $64.20 level, dovetailing to about 50 pips thereabout. And if the price goes on to break down, retest the support line of that descending channel, that will definitely incite more selling ideas. So if anything new comes up, of course, I will update us accordingly. So if you have any questions as regards to all I've said, or you need some further clarifications, feel free to let me know in the comment section. So I'll take about 5-10 seconds off. Let's see if there are any questions. I move on to the next asset on our watch list. Stay tuned in, guys. All right. So in the absence of no questions, I want to assume that we are all on the same page, right? And we've marked out the structure. On the US crude oil, I'm going to be exercising a lot of patience. The market is very much indecisive at the moment, and considering the fact that the market is a US dollar denominated asset, no major economic data so far this week till this current moment. No Fed official speeches. And the only event we are looking forward to this week is coming up tomorrow. That is the S&P Global publication and the initial jobless claim count. So major key players may want to step aside from the market, waiting for this event to happen before making any aggressive bets. And this could lead into indecision in this market. So for those of you, for those of us who have a sell position running at the moment, please move your stop losses. Anything could actually happen. So I wish us all the best of luck on the US crude oil. So moving on to the next asset on our watch, and you give me some minutes, please, about 2 minutes. I want to attend to my boy, and I will be right back. All right. All right, guys. I'm sorry. If I did not attend to him like that, it will just keep disturbing and interrupting this session. So it's better I just attend to him. Okay. So we are moving right into the next assets on our watch list. So the next one we are looking at now is the USDJPY. And of course, on the USDJPY, what a week for us on the USDJPY. Currently, I hit TP target yesterday around the 147. I wasn't able to maximize this whole length of bearish move. Remember, we were looking at selling the USDJPY right below the 148.00 area, as you can see here. This was the initial range bound structure we identified on Monday. We had the support line of the range at the 148.00, which interestingly was our key level. Then we had the resistance line at the 148.670, where we were looking out for buying ideas, but that never happened. Instead, we saw price breakdown, both the ascending trend line that has been supporting this bullish momentum since the beginning of this month, and breaking down the key level as well to incite a sell-off. And for those who missed out on the first one, the market was kind enough to come back, retest structure, and look at what happened. So for those of you who are part of that move, I can remember that we should have our TP at the 147.00 area, dovetailing to approximately 100 pips. If you are taking it, well done, and kudos to you. If you are still in the trade, move your stop losses, secure the current position. If you're already out of it, well done to you. So moving on to today's session, what are the chances that the bearish momentum will continue? Or is there any chance that buyers can come in at any point in time? First of all, we need to acknowledge the reason why the Japanese yen out of the blues began to regain some traction. And one of them is though that came later yesterday, and this bearish momentum actually started on Monday. I guess there has been some green light ahead of that meeting between the US and Japan as regards to trade talks, and finally they were able to come to an agreement of 50% tariffs on both ends, which is quite surprising and at least better than the 25% that US imposed on Japanese imports. So it's still better in some sense. And of course, this increased some positivity around the Japanese yen. And at the moment, pressure is on exporters' profits due to the 15% tariff, which might trigger stock pullback and raise demand for yen as a defensive play. And this obviously is going to be favoring the yen. And if we look at the global equity as well, it is tumbling at the moment, and the new political drama in Japan is also helping the yen gain value at this point in time. Now, if we take all of this into consideration and the worries about Japan's debt and overspending, could scare a lot of investors and attract safe haven flows into the times. Even when the economy is not doing well, the yen finds a way to gain some positivity due to the fact that it is considered to be a safe haven asset. So as a result of this, we'll begin to notice price drop significantly, and this is duly reflected on the chart. Now, in as much as this bearish move is looking very promising, we cannot ignore the chances that buyers can also come in, because if we look at what happened during the New York session yesterday, we saw how the 146.300 area just right here we saw how sellers were not able to break through that area, giving us a support line, and it could be a room for buyers to come in to take over the market from that particular area. So we need to be very, very careful jumping into the sell wagon. Now, if we consider this technical support line here, and looking at the situation in Japan, where the Bank of Japan is not thinking of hiking interest rate at the moment, meaning no major interest-based support for the yen at the moment, the dollar could still bank on this to rise. And if we look at the on the other side of the pond, the US economy is doing very well. We have the US Treasury bond yield rising significantly, putting a lot of pressure on the Japanese yen. And of course, tomorrow we are looking forward to the S&P Global and the initial jobless claim count, which may likely bring in some further positivity around the US dollar. And as a result, we cannot just say because of this whole trade talk situation and the technical details we find on the chart, we're just jumping into a sell. So we need to strike a balance at this point. And to help me understand the implication around the sentiment in the market, I do have a simple trading setup on the 15 minutes time frame. And if you look down at the bottom of your screen, you will see that I have two positions running on the USDJPY. One is for buy and one is for sell, due to the very, very important confluence we are in right now, and I will explain that to you in a moment. So let's look at the 15 minutes time frame together. So this is what I was able to get here on the 15 minutes time frame. First of all, after capturing the character of price action in the last 12 to 18 hours, we have a small ascending channel. Look at this right here. We have the resistance line after the connection of the higher highs, and then wait a second, yes, okay, and we have the support line right here. Okay, now look at what is going on around the support line of that ascending channel. This is capturing the last 3 hours now, and price has been oscillating around that area. Now we are caught within the possibilities of buyers taking price back up like it has been doing here. Look at this. We have this one right here, we have the situation right here, and this could incite that move to the upside, which is very, very possible, and opening up bullish potential around this area. And the other one is the potential of price breaking down the support line of that ascending channel to incite a sell-off. So what I did here is I actually sold below the 146.700, and I also placed a buy stop order at the 146.850 to join the uptrend if that is going to be the case. But as you will see, both trades got triggered, and at this juncture I will just have to place my stop loss on the buy position at the previous low. Let me do that right away, and then bank on the sell if that is going to continue the move to the downside. And for the sell, I'll place my stop loss right above the 146.850 right there. So let's see what goes on. I still think, based on the technical structure we are seeing on the chart right now, and considering the positivity around the Japan-US trade talks, we could likely, I think there is still enough room for the Japanese yen to gain some traction, and this could lead into price to the downside. So I'm leaning towards this, but I'm open to whichever direction the market goes. So we have two trades going on right now. So for those of you who are yet to join, selling at this point in time is looking very reasonable. Anywhere below the 146.700 is looking promising to sell, and if price goes back up, breaking above the 146.850, then price is back above the support line of the ascending channel, welcoming buying ideas. So let's see how the market will play out here. It's a simple trading setup, capturing the current sentiment in the market And please, I need to emphasize this. As soon as price moves favor, in the case of the USDJPY, maybe about 30-40 pips, kindly move all stop losses to secure that position. Break even is most appropriate, so that the worst case scenario will be break even if price action turns back. Remember, I said earlier that we are likely going to be seeing extended sideways trading activities here due to the anticipation of the initial jobless claims and the S&P Global publication coming up tomorrow. So please, let's take note of this while we continue to monitor price action. If you have any questions or you need some clarifications, feel free to let me know in the comment section. So I will take another 5-10 seconds off. Let's see if there are any questions before we move. Yes, I'm sorry for that break. I was told we are no longer online, but I guess we are back now. I hope we are all together. We're all on the same page here. If you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. Right? Okay, yes, Jonah Aruna says it's not streaming anymore. Yes, it wasn't streaming anymore, but right now I guess we are seeing me. You can hear my voice loud and clear. Just say hi in the comment section, and thank you for your feedback. Voldy Ransom, good morning to you. Glad to have you here. Okay, thank you, Jonah Aruna, for that. So we are back on good. Voldy Ransom is asking, do you trade for a living? Yes, I do trade for a living. I've been trading for 8 years now since I left the banking sector. Though there have been some lows and some highs along the journey, but I do trade for a living, simply answering your question. I'm glad to have you here with us. Okay, so in the absence of no further questions, I guess we are all on the same page, right? And it's high time we moved on to the next asset. So the buy position for the USDJPY has finally closed in a loss, and we have the sell position which has been triggered at the moment, and it has been triggered at the moment, and let's see how far this is going to go. So I wish us all the best of luck on the USDJPY, and if anything new comes up, I'll definitely update us on my Telegram platform. So moving on to the next asset on our watch list. So the next asset, and of course the final asset we are looking at today, is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And what a week we have here on the XAUUSD, as we were able to buy this asset. And of course we can see since the buy happened, price had moved over 700 pips in our direction, and this was what we were looking at the beginning of the week. We had a range bound structure, remember. We had this between the 3,359 and the 3,345 right here, as you can see, and then we were waiting for price to, you use our range bound structure. We wait for price to break out the resistance line to consider buying, or break down the support line to consider selling. And during our live stream, this breakout had already happened. So I said we have two options. We want to wait for price to come back, retest the structure for us to continue the uptrend move, or position ourselves at the break of the 3,375 to incite the buy position for us, which was exactly what happened. Price broke out of structure, and since that moment we can see price had continued to rise. And for those who are part of this bullish move, well done and kudos to you. So if you still have a position running, that is if you had kept your position running till this present moment, I guess you have to move your stop losses and secure your buy position. I left the trade around the 3,400. That was on Monday. This was where I left, right here, about 280 pips before I left on Monday. In fact, if you look at my history here, you will see that I had about $65 from that position. Okay, I left around 3,420. Okay, it's 3,420 I left. And like I usually say, I don't trade on Tuesdays, so I didn't come to the chart yesterday. I just placed my TP and allowed the trade to run. And today now, looking into the chart, I'm beginning to notice a consolidation going on in the market. And if you would ask me, gold has been rising because of growing uncertainty around the US EU trade talks and questions over the Fed's independence. Both, of course, has been pushing the investors towards safe haven assets. And there is a new kid in the block right now. Bitcoin is saying a lot right now. Bitcoin and tech stocks are stealing some shine from gold at the moment, keeping the price gains a little bit in check at the moment. But can this be strong enough to negate the uptrend scenario around this particular market? Well, let's look at the 15 minutes time. I think I have a structure on the 15 minutes time frame if it is not deleted yet. So on the 15 minute, okay, first of all, let's look at the 1 hour time frame here. So I have a new structure here, but on the 1 hour time frame, I want us to acknowledge the fact that the price of gold has been rising since last week Thursday, and we have a uniform ascending trend line to buttress this fact. And you know how we use our ascending trend lines. As long as price remains above them, we have no business selling that asset. We'll continue to look out for patterns and structures that support buying ideas. Now, scaling down into the 15 minutes time frame, we want to capture any character around that range bound structure. So this is what I was able to find here this morning when I zoomed in, looking at the character of price action in the last 12 to 18 hours. You can see the market has been consolidating, which is not surprising to me. Remember, I told us that we are looking forward to some major event tomorrow. That is the S&P Global publication coming up 1:45 p.m. UTC. That's 2:45 p.m. local time. And the initial jobless claim coming in by 12:30 UTC tomorrow. That 1:30 p.m. is going to be playing a significant role in deciding whether gold is going to rise or not. And pending this event coming in, we are likely going to be seeing extended sideways trading activity. And this is what is going on right now. And at this point in time, I have no trade running. I'm very cautious around this particular area because there is a chance that price could drop back into the trend line we identified on the 1 hour time frame before another wave of bullish momentum will happen. It is a possibility. And if price action breaks out of the 3,435, this might be a good opportunity to buy. How much I would have loved seeing the market here this morning around the support line. If you see, this happened before I could even look at the chart. This happened around 6:45 p.m. I was still preparing for the day then, preparing my kids. So I usually come to the chart around 7:30, 8:30, and by the time I came, price was way out of that zone, and it was much more risky for me to buy when price is way up out of the support line. So I needed to wait. So I'm still waiting at the moment to see how the market will react. So price is now gradually approaching the resistance line at the 3,435. And if we go to as far back as yesterday's trading session, we saw how that same area was a strong resistant line. So you can see price is back into that zone. Will we see a breakout of structure, or will price respect it one more time to push price to the downside? So my center of focus for today is the 3,435. I want to see what happens here. If I see something like a double top structure around this area, maybe on the 5 minutes time frame, I would like to sell the breakdown of the neckline of that double top structure. That will be giving me a minimum of 140, because I want my TP to be at least at the support line here at the 3,417, or extend it to 3,408, which is around that ascending trend line. But if price action breaks out of the 3,435, that is taking out that resistant line, a retest of structure, if we are lucky, will give us confirmation to join that uptrend move. So at this juncture, I have no other choice than to wait patiently for a structure to mature, after which I will be looking at placing a trade. So for now, I don't have anything to say here at the moment. Let's wait patiently. Let's see how the market reacts with the 3,435. And of course, I will be updating us as I continue to monitor price action on my Telegram platform. So that is basically what I'm looking at here on the. If you have any questions, feel free to let me know in the comment section. So I'll take about 5-10 seconds. Let's see what questions we have there. And then if there are none, we'll just go ahead and round off on today's Forex Morning Mastery. All right. So in the absence of no questions, I guess we are all on the same page, and it's on this note. We have come to the end of today's Forex Morning Mastery, where we were able to dissect the 3 financial instruments that I am monitoring for this week, which includes the USDJPY, the US crude oil, and of course the XAUUSD. And we were able to identify simple trading setups that we are going to be using to navigate this market today. I do hope we all mark the structures out on our chart, as we are going to be needing them to navigate the market today. If you have done so, well done, kudos to you. So all we need right now is exercise patience and allow the structures to mature. We currently have a sell position running on the USDJPY, which is currently running in profit at the moment. We are still looking forward to the USOILSPOT and of course the gold commodity to do a mature technical structure before we jump into any of that position. And remember, we said here that we are likely going to be seeing some extended sideways trading activities as market anticipates the major events coming up tomorrow, which includes the S&P Global publication and of course the initial jobless claim count. So we need to be very careful. As soon as price moves significantly, let's move stop losses, secure the position, because there is a high tendency for price to snap back into your entry point. So if it does, the worst case scenario will be at break even. So please, let's take note of that. And of course, if anything new comes up on the gold and the USOILSPOT or the USDJPY during the course of the next couple of hours, I will definitely update us on my Telegram platform. So for those who joined us for the first time today, I'm very glad to have you here with me, and I do hope you are able to gain one or two things from this discussion we had. If you did, you want to be part of our subsequent editions, as the more time you spend with us, the better you get to understand my analytical approach. And I look forward to seeing you same time on Friday. That's the next time we're having this, 8:30 a.m. UTC. That's about 9:30 a.m. West African time, as we come here again to review how well these assets are doing and of course prepare ourselves for the final trading day. So it's on this note I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.